Myers, welcome to the Capital Raiser Show. I'm very excited to talk to you, man. I know that you have an upcoming event here. You're going to be on Dan Hanford's the Multifamily Investor Nation Summit, right, dude? So let's start with how did you get invited to that, and what is it that you think that they found in you enough to go on and present some material for them?
Yeah, this is actually my second solo gig with Dan. I got to do the one back in June, and we talked about partnering and my approach to partnerships. And then this time I'm coming back to talk about JVs versus syndications and why we like JVs over syndication.
That's
Uh,
exactly what we were just talking about before the show, man. That's awesome.
yeah,
Perfect.
yeah.
Okay.
So what did he see? I don't know, man. I'd like to say Dan sees I'm a great operator in the space and I'm consistent with the message that I give and the walk that I walk, but I'm not certain. I will tell you that, when I was on his podcast, he asked some super tough questions, and the feedback that I've received from a lot of people was, you've done really well with it. We like the way you analyze deals. And so that may be a part of it. I'm not completely certain. I'm just grateful for the opportunity to share the stage with people like Yona Luis and a bunch of other folks who I look up to in multifamily.
Awesome, man. I think a lot of people look up to you, dude. I think one of the things that I respect about you a lot is that you have a consistent branding that you're doing on Instagram and a couple other places where you're constantly promoting videos, to add value to the space, the multifamily space. But let me ask you this: what was one of the tough questions that he asked you?
Oh, so Dan wants to talk about all the numbers in his podcast, right? And so it was a deal that I'd bought probably 12 months before, maybe 11 or 12 months. And he was asking me about entry cap rate and a bunch of other stuff. And from our perspective, entry cap rate doesn't matter. Um, it's a number, but we buy broken apartments, right? So we know that there's an issue with the cap rate. We know there's an issue with NOI. And so that's not one of our evaluation criteria going in. But I had to go back through the spreadsheet and dig that stuff out, and we were able to get through it. But yeah, it's just some of the stuff caught me off guard. Even though I listened to his podcast, I guess I never really paid attention to how in-depth he goes on the analysis piece of it.
So let's jump into that, dude, because I get questions frequently about what's the cap rate and on this project that you're doing. So we're about to close on a 90 and a 94, one in Tucson, one in Houston this week. So we're super pumped up. But I get that question like, what's the cap rate? And then our model is, at least right now, and I'm not saying it's going to be going forward, and we are evolving. You probably are too. But people ask that question, right? So what is your cap rate on this project? And a lot of times I'm not prepared to answer that question because of the exact same thing that you said, is that we look at distressed assets that a lot of times that really doesn't matter. So how do you respond to people that ask you, hey, what's the cap rate on your project, bro?
I don't know. We don't look at it on the go in. Here's what we're looking at. We're looking at the ability to bump rents, which will increase income. We're looking for other ways to increase income. And we've identified whatever number, 1, 2, 3, 4, 5 line items on the P&L where we can reduce expenses. And because we can do those things, we are able to force the appreciation. The cap rate on the back end, we expect it to be whatever it is for the asset class. And so we primarily buy Greensboro, North Carolina. And so we know what cap rates are today, and we bump it 0.5% or 1% over the life of the project. But, at the end of the day, we know that something reasonable, 7, 6, somewhere in that range is something reasonable for this market. And so we'll use that to come up with our back end number. But going in, we do not look at cap rate at all. We don't feel like it's a great indicator of whether the asset or the project is something that we can drive value on.
I agree, full blown. So let me ask you, so you are currently in what did you say? It was
Greensboro, North Carolina.
Greensboro, North Carolina. So how many units have you bought in that market? Is that what you want to do? You want to stay in that market? Are you looking at other markets? What do you like about that market?
Yeah, so we're right at 70 units in this market. And yeah, I love it. I came back. So I went to college here, got a job afterwards, moved to Virginia, spent a number of years in Virginia, And then when I left corporate America, I came back. The cost basis is lower than what I was seeing up there. The rents aren't all that much different than what I was seeing in Richmond. And so we're able to use our analysis pretty quickly back of the napkin, figure out what's going to work. And for the amount of risk, which is the money invested versus the return that we're seeing, I find North Carolina more favorable.
So people see you and what you're doing. How do you share your message about the projects that you're doing? And so before we go there, okay, so I used to do probably something very similar where we would film some projects, fourplexes, 12plexes here in Phoenix, smaller level units. And we would explain, how we found the property, what we're going to do to the property, how we're going to tenant occupy the property, what we're going to do to reposition the property, and then sell it at a very effective and fast level. And then people started saying, hey, we like what you're up to. How can we invest with you? This is way back during the crash. Is this something model that you're currently doing? Is this how you share your projects with people? Do you have an investor database that you pitch to or that you talk to or you share your projects with? Tell us all about your model, man.
Yeah, so I don't know that I actually have a model in the grand scheme of things. So the people I invest with are my friends, right? And so we put our money together. We're partners in the deal. There are many deals where people haven't actually seen the property before we close, but they're part of the strategy team. They're part of the analysis team. They're part of, some people come in and do due diligence with me. We go in, we sign the loan together. Like we are, I know their kids' names, right? I know their spouses. I can go to their house unannounced. Like these are the people that I want to build with because I look at getting into one of these deals like getting married, right? And so if you are signing a loan with somebody, if you're going into a business partnership with somebody, it's a contract. You're tying your financial future to that person. And so I'm really particular about who I go into business with. I've heard so many stories about poor partnerships and seen so many people get wrapped around the axle and get money stolen from them that I've decided to grow a little bit slower than what a lot of people are willing to do. And so that's why our preferential model is more JV than syndication. Now we've got a really big development deal that we're working on, and it's north of $10 million, but south of $20 million, where we're putting in probably 115 to 120 units here in Greensboro. And more than likely we'll syndicate that. But in recent conversations, we're like, well, maybe we should just syndicate or just do a JV on this one too. Because at the end of the day, there are so many things that can go wrong in the operation of an apartment building. I consider them wild animals, right? And so, Ruben, you get this thing, it's been mistreated by the owner. You don't know how bad it is until you actually own it, right? And your property manager is going to do a lot of the work. But the fact of the matter is, you may need money that you didn't know you needed. There may be people who move out and you have no idea they're going to move out. And so now you got a vacancy issue that you didn't expect. I want to go through that with people who I've seen time tested in battle. I want to go through that with people who have been stressed, because at the end of the day, all that I have is my reputation, right? And so if I'm doing this with somebody who doesn't actually understand how to invest in multifamily or doesn't understand how to be in a partnership, you end up in one of those situations that I put in every presentation where I do the actual every presentation where I talk about partnerships, and there's this boat, and there's a hole in one end of the boat, and there's two guys with buckets trying to get the water out the boat. And then there's two guys on the other end of the boat, and they're pointing and saying, man, we're glad there's not a hole in our side of the boat. Everybody's in the same boat, guys. There's just no way around it. And so for me, I want people who I know are going to get the bucket and try to get the water out the boat. I got out of corporate America so I could work with people I want to work with. And those are the type of people I want to work with. People who take extreme ownership, extreme accountability for the things that are happening in their world. And I don't think I get that from a 30-minute conversation at a conference, an investor phone call that we did for 15 minutes. Like, I want people who put their money in to actually offer their thoughts to. And I know a lot of people don't want to do that. I know it's not as the most efficient model, but for me, it's the one that makes sense, because it can get pretty lonely out here when everybody else has a job and you're the only one working on, the multifamily part of the business. And so for us, I can get your attention if your money's in the deal and I got a problem, versus, you just, I call you because you're at work and I say, hey man, I got this issue at the apartment building. Yeah, I got all these other things to do. I'm not interested in the apartment building that I haven't even invested in. So it's kind of selfish too.
Man, so I want to jump into the syndication. Have you syndicated before?
I have not done a full syndication now.
And this first project, okay, so that's fantastic. I would love to hear about this process of, you're constructing, if I understand correctly, units, and you're potentially considering doing a syndication model on that. But
Mm-hmm.
I mean, in terms of the paperwork side of things, I'm not sure if that's what you specialize in, but creating those things, like going to the city and then going to the lawyer and then like collaborating between the two things so that the lawyer syndicates or writes the subscription agreements and the PPM agreement and everything else about that. And then working with, I mean, it's got to be overwhelming, right? All these paperwork issues that you have to do and documents you have to sign and going to different places. And from somebody that's doing joint venture type, which is, I would say, not less complicated, and it's like you said, it's its own animal that you have to handle in a certain way. But take us through that process of dealing with all of those aspects that you haven't had to deal with on your previous projects.
Yeah, I mean, so for me, it's not terrible. So I'm a civil engineer by training, and so we've taken this full gamut. We rezoned the property, and now we're going through the construction drawings and putting, the project together so that we can actually get bank funding and so on and so forth. The Actually getting the subscription agreements and the PPM, like, that's up to the securities attorney. Like, for me, that's not, I'm going to review, I'm going to understand everything that's in the document. I'm going to make sure that there's nothing in there that we can't actually feel like we can deliver on. But at the end of the day, like, those pieces, that's why we hire the expert, right? And for me, like, the syndication and the JV aren't all that different, right? Because the JV is just the GP piece of the syndication model. The only difference from my perspective on the syndication and the JV is all of the PPM and all of the limited partners that come in. And some people change the waterfall because they have limited partners. But for us, we're going to keep our waterfall the same as we do when we have a JV deal. So for me, I don't see it as being tremendously complicated. The only issue now is, do you have a big database where you've got, you can send emails to the people who are accredited investors, because we will do a 50C offering on this one, or a C exemption on this one versus the B. So there won't be any non-accredited investors in ours.
And so how do you feel about, is this going to be the first time that you've gone after only accredited investors, or have you done that in the past?
Most of the investors, there's probably one or two guys that are sophisticated investors in my other deals, but everybody else has been accredited. So that's not a big change for me.
How do you structure the joint venture projects that you've done, or how have you done it in the past?
Yeah, so the joint ventures are usually structured where I'll hold back a portion of the deal, 10 to 15% for myself. And then we give a kicker for everybody that signs the loan. And then the rest of the equity is sold to the rest of the partners. So if you didn't sign the loan or you didn't find the loan, then you put your money in, and you also come up with whatever your active role is. It can be helping with property management. It can be helping with due diligence, whatever we come up with as a needed piece of your deal or a piece of the partnership. We assign that to a specific person so that everybody has an active role and they're not solely relying on me to deliver a return for them.
And then,
And
so what are the people that have, so it sounds almost like key principles, right? Or people that have liquidity and assets that can get a loan
mhm.
to help you close a project. What do they get in your structure for providing that?
They get a piece. So let's say we hold 30% of the deal back, and we sell the rest of the equity for the people that um, are adding in, I'll say, a less significant way. We'll split up that 30% of the deal amongst me and the other people that are on the loan, in addition to whatever I take for putting the deal together.
Interesting. That's really cool. It doesn't sound too much different than a syndication where if you have a partner, because you can syndicate without getting Fannie Freddie loans. You can
Right.
syndicate using a bridge loan where you don't need a KP, and that's what Bakerson has done a lot of the times in the past. We're switching a little bit to a model where we're doing longer term holds where it may make sense to get a long term loan right off the bat before you even take on the project. But a lot of the stuff that we've done in the past has been, through private equity bridge financing, and we don't need a KP for that.
You don't. And so, but here's the thing for me. This is part of the reason why this is important. When me and Duran were sitting on the stoop our sophomore year of college, and we saw that the owner of our apartment complex was making $700,000 a year top line, and we never talked to him, and we didn't know how anybody could actually get a loan to go do something like this. We started scratching our heads saying, how do we do it? Who can we talk to in order to get us to this place? My goal is to help people get into the place where they can go do their own deal. Because when I walked out of corporate America, I walked into a bank and I had some cash, I had a credit score, and I thought they were going to give me a loan. I just built a $20 million division for the company I was working for, and they weren't, right? It didn't matter how much money I had. It didn't matter that my credit score was over 800. And so I needed to go partner with somebody who had actually done a multifamily deal. And it took me 4 or 5 months to actually find that first partner. But after I did that, then I was the expert. It was like, you either have experience or you don't.
Yeah.
And so when you participate in a syndication, that box doesn't get checked. And so, yeah, you'll get access to some reporting, you'll see some PowerPoints and some webinars, but you still aren't able to go off and do a deal on your own if you want to go do your deal. And so for me, that's the difference. I want to open the door for people who want to go do their own deals. And the other thing I want to do is, I've learned that there's a whole lot of people who have no idea what they're putting their money in. They just see apartment and they decide to share their money with sponsors. And I struggle with people investing. And so the other reason why I'm uncomfortable with, the B offerings is because from my perspective, there isn't really a standard on whether somebody's sophisticated or not. And so what happens if your deal goes bad and one of the sophisticated investors says, hey, I didn't know what I was putting my money into? Because if I understand it correctly, like, the sponsors can be responsible for giving that person every penny back that they put in the deal. And I mean, for some people, that's a life-changing event.
Yeah, so you have to have that conversation with people saying, "Hey, if this deal, how are you going to respond if I tell you that, your money's not coming back as soon as you were doing?" And then based off of what they say, you decide it's a two-way relationship, right? Because they want to invest with you, but you also want to make sure that you're not bringing in somebody that's going to cause a lot of problems or that you're taking their last dollars. You want somebody that says, "Hey, I understand that there's risks involved. And even though I could lose money in this deal, I could make a lot of money in this deal." Based off of the relationship that you create with them, you decide on both sides whether it's a perfect fit. You don't want to take somebody's money if you think that it's not going to be a bad fit. And obviously, from the investor side, you don't want to invest money into a sponsor who you think may not handle your money in the correct way. So, what kind of conversation do you have with the people when they're going to invest with you? Do you have something like that? Are there specific questions that you ask those guys?
Yeah. So for me, since these are people that I have pretty long-standing relationships with, I think the shortest relationship I have with anybody that's participating in a deal with us has been 5 years, right? And so they know who I am, they know what I'm about, and the conversation won't be, hey, if this doesn't work out the way that we say that it's going to work out on this piece of paper, is there going to be a problem? Because they know personally that I've done everything I can do to make sure that they get their capital. The other thing is, as a general rule, I put investors' money, and I'll use investors instead of partners in this instance. I put investors' money above my own. I'm not a person who thinks, hey, it's other people's money, it doesn't matter. Like, I'd rather make zero and they get their money back, or I'd rather lose and they get their money back than me just kind of shrug my shoulders because it wasn't my money.
Right.
And I struggle with the people who treat other people's money as if it's not valuable, because they worked really hard, and some people work really long in order to do that. I mean, it's their life savings. And so, you know, I don't think you play with that, and I don't think you minimize the level of trust and the confidence that they're putting into you. I personally think they're taking a bet on you. And if somebody takes a bet on me, I want to prove that they're right over and over and over again.
Yeah, man, that's fantastic. I really love that approach. Tell us about, okay, so you're potentially going into the syndication model on this. Are you sure that you're going to do it, or the joint venture structure is still a possibility for you on this new construction deal? Yes.
Yes, so it will either be a JV or a C offering.
And you specifically chose that over the B offering, realizing that you're going to be dealing only with accredited investors. What are some of the benefits of that specific style of investing, going after only people? Do you think that you have enough people in your database that are going to be accredited? A lot of people find that maybe they don't have as many as they thought they did that were only accredited. Or are you going after new people?
No, so it'll be a combination of the people who've always been a participant. We expect to have 3 refinance events in 2020 based on stuff that we've done in the past. And so that's a real opportunity to unlock some capital. But in addition to that, we'll probably connect with a handful of other people who are accredited. One of the missions for 2019 and 2020 was to grow my network with more millionaires, and not just 1 million air, but like 5, 10, 15, 20 million dollars. And
Mhm.
so, and that's a strategy has actually been working pretty well. I had one guy reach out from a podcast he heard last week. He was like, yeah, I got 8 million and Fannie and Freddie experience, let me know if you need me. Had another guy on the same day reach out, I was like, I got 10 million and Fannie and Freddie experience. I didn't realize that you were even talking or looking at different alternatives, but please keep me in consideration. And so, because we're doing the right things and people are seeing results on the properties that we've bought in the past, they're opening up their arms and saying, we like to partner with you. And for me, that's flattering, right?
Yeah.
For somebody to say, hey, I'm willing to place a bet on you, Jerome. And I personalize it. It's not just me, but I personalize it because the importance I put on it.
That's really cool. So the material you're going to present at the upcoming summit, tell us about, how you're going to describe. Have you prepared for it already or no?
No, I still got a month. I'm waiting a little bit, trying to get some other fires put out. But yeah, I've thought about it, and I was actually thinking about it on my walk this morning. And the long and the short of it is, here's why we take this approach versus the other, and they both have their merits, right? If your goal is to scale, you can scale a whole lot faster with syndication. You can take money from people who you've never even met. I mean, I just got a Hunter's book, right? And he talks about having $300,000 come in and he never even talked to the person. Like, that's a real thing. That will never happen in my model, just the way that I've set it up. And to be honest, I don't know that I actually want it to. Again, for me, it's about exposing people to the actual business and giving them the opportunity to go do their own deal if that's what they want to do after they do a deal with us. And if not, because they had an amazing experience, well, they can just continue to participate in the deals that we're doing, right? But I don't want anybody to be handcuffed. I don't want anybody to be tricked or hoodwinked or anything. I like to open up the curtain and let everybody see all of the good, the bad, and the ugly, because anybody who tells you like everything goes as planned, or they haven't ever made a mistake, or they haven't had a month where the property lost money, I don't believe them. I just, it's not real. This is a real business. There are real expenses. There are real things in the market outside of your control that impact the P&L. And you've got to be prepared for those things. And you've also got to tell the people who you're partnering with the whole story. If transparency isn't part of it, then how can they trust you with, I mean, I I got a wire one day, right? It was 75. No, it was a check. One of my friends gave me a check, $75,000, and my daughter was with me. She was like, "Oh my gosh, that's like the biggest check I've ever seen." She was 9 at the time, right? And I was just like, "Yeah, it is a big check, but we're gonna go buy a multi-million-dollar building too." And she kind of scrunched up her face, and she was like, "Well, why would people give you money to go buy a building?" And I said, "Well, one, they trust me, but two, they're going to get something in return. They've got an opportunity to make a lot of money. And, I'm building this not only for me and you to live off of today, but when you're older, if you want to be in the apartment business, you'll be able to go do that, sweetheart. And you won't have to go get a job and trade your hours for dollars, because I did that and I hated it, right? You can do something where you can make money and not have to go anywhere in order to get it, because you've hired a property manager to manage your property, and you can schedule a meeting when you talk to them on your schedule. You can go by the property and just do a drive by when you want to. Like, you have the freedom to go and do the things that you want to do. And so you don't need a job, you need a stream of income. And like, we're having those conversations today, and it's my ambition, it's my desire to change her whole trajectory, right? Because I don't want for her, or even Leah, the younger one, to have to live in that paradigm that I did, that you've got to work till you're 65 or 70 and hope you retire and hope that you live a few years past the day that you walk out of your job. Like, I don't want that for them. I want them to be free.
Dude, you're tugging at my heart real bad, dude, because I definitely wanted like my kids to grow up not focused on career, really focused on like, if somebody asks you, what do you want to do when you grow up? You don't answer with a career answer. It's more of like, I want to have this much passive income, or I want to have this style of business, or I want to have this many employees, stuff like that. So that's really phenomenal. Another thing that you said that was really powerful too, dude, was that you mentioned that you want to have some people be able to grow by working with you and go out and do it by themselves. Have you had that experience? Has anybody gone out and done it under working with you? Do you consider yourself a mentor or a helper or somebody that's going to facilitate that growth in somebody? Is that part of what you want to do in life?
Yeah, so I mean, for every deal, we bring at least one new person in to sign the loan, right? And the goal is that, hey, if you want to go do your own deal, great. We'll still look over your shoulder. We got your back. And if it's a great deal, we want in on it, right? We want to participate. But if you just want to go do your own thing independent of us, that's amazing. If you just want to do deals with us, that's amazing. Like, for me, it's all win-win, right? Because if there's enough people in the marketplace that either I helped or want to help me, then it just expands the network. And this is a relationship business, and anybody who tells you anything different is not telling you the truth. And so, getting access to deals, knowing what's happening, if I get to a place, Ruben, where I can't take the deal down, maybe I need to call you, because you've got a different network. You've got more people who can actually come in and do it. I mean, you run a syndication model, right? So, at the end of the day, I know I can't buy every deal. I'm going to try, but I know I can't buy every deal. And so, who's front of mind? Who's the first person you think about when a deal comes up? And I just want to be that for as many people as possible, right? And the other thing that I'm trying to make sure that I do is, I don't want people to buy a bad deal, right? I've watched a lot of people buy bad deals, and they feel like they've actually accomplished something by doing that. And at the end of the day, all they've done is make sure that they lose money. And I don't know why anybody would get excited about making sure they lost money, but that's kind of the name of the game, especially when people want to skip out on education. Like, they don't want to pay for the education, and then they get in a place and they don't know what they're doing, and it just, the blind leading the blind, it gets ugly.
So
And
tell
then
us
I come by it.
True that. Tell us about the nurturing of people. So you're doing it on two levels. You're doing it with your fellow investors, and you're also doing it to your children. So I think that's phenomenal. Where does that mindset training come from? What is it that you want to project upon not only your future potential partners or people that separate themselves from you, but what you want your daughter to get from seeing you do this business? What kind of a mindset do you want her to have? I'd really like to explore that.
Yeah. I mean, so my thesis on life is dreams should be real, right? And so I'm running around collecting social proof of that thesis so that one, it confirms that I can do the things that I want to do, but two, it gives me examples when I'm talking to people who are on their journey and they're getting beat up, a little run down, they don't have the support of the people around them. And say, well, this person I know did this, 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 and this, and here was the end result of that. And so maybe that helps you. Maybe that gets you to the place that you need to be. And I think about it, there's a lot of people at the starting line of a marathon. There's a whole lot of people at the finish line of the marathon, but along those 26 miles, there aren't very many people. But the few people that you do see, they're volunteers and they're holding out cups of water and they're letting people quench their thirst and maybe some Gatorade in there every now and again, but they're quenching their thirst. And so I want to be along the path. I want to go on the path with people and help them accomplish their goals because it gets hard, right? I mean, if you're buying a business, and so it's entrepreneurship at its finest. And, the returns don't always come in as soon as you thought they will. And so what do I want to teach Kaya? I want Kaya to know that she can have anything she wants if she's willing to pay the price. Anything, right? If she's and the price of admission isn't set by her and she can negotiate, but at the end of the day, the price is the price. And if you're willing to make that level of sacrifice in order to get into the game, then you'll be in the game. And then it's up to you once you get in the game to make sure that nobody takes you out. And for me, effort is everything. Extraordinary effort is the difference in the times that I got what I wanted out of life and the times that I didn't. And I'm just trying to be that example for them because if I can do that for them, my hope is that they'll adopt at least some of that and then share that with their community and the ripple effect will continue.
So, what are some of the sacrifices that you've made? Some of the things that you've lost out on, the prices that you've paid in order to make this business happen and take it to where it is now?
Yeah. So anytime that we have a negative month in a reposition, I write the check. If everybody doesn't fund on a partnership, I get rid of my acquisition fee. Whatever it is. And I mean, I had a really nice job, right? I was making high six figures when I walked out of corporate America. I didn't make that my first year or even my second year when I came into apartment investing full time. It's just not a part of the model. And I was okay with that, right? I was okay with taking a step back and what my earnings were. And I didn't, in hindsight, it wasn't really a step back, right? Because at the end of the day, what you make in your W-2 and what you make through real estate get taxed very differently. And then when you pile on depreciation and some of the other things, you can cash flow without actually making a profit. And so that really just changed the way that I looked at money. Predictability is probably the biggest thing that I've given up though. Like if you have a job, you're going to get paid on the second and the fourth Friday or on the 26th or whatever that is until you don't have a job. Right. And so there's this illusion of security. Um, but as long as, your employment isn't in jeopardy, you know when you're going to get paid. And so it allows you to plan life. For me, I get paid in chunks. I might make $30,000 here. I might make $40,000 here. But whatever it is, I don't know if it's going to come in January or March. And so, being a better planner, being frugal, being fiscally disciplined has allowed me, and those were habits I cultivated when I had a job, but those are things that allow me to actually weather the up and downs of the roller coaster. And, as cash flow increases, that stuff gets a whole lot more predictable. But, the way that the reporting goes, you don't know how much money you made until the accounting closes for the month. That's just the fact of the matter on your cash flow. And you can be great for days 1 through 29 and something happened on month 30 and it wipe out your cash flow for the month. It's just part of it. And so, that's not what happens when you actually have a job, you're an employee, you get your fee, but you're making a whole lot less than what you probably would make if you were out on your own. Profits from my perspective are better than paychecks. And so I'm willing to give up that predictability for the ability to participate in the profits.
Is there anything that you're doing to mitigate that period of time where you don't get cash? Is there any other side hustles or businesses, or even within the multifamily realm, some things that you can do that you've contemplated or are actually practicing that will allow you to receive some income while you're building this business? So that way, when you go 4 or 6 months or longer without a paycheck, you can still survive and continue to, because that's a big thing. Like when your investors are putting their money with you, if you can't survive, that affects their bottom line too. So
Mhm.
they want to make sure that you're able to survive and weather the storm if a storm comes. Tell us if there's anything that you've thought about or that you're implementing so that you can actually survive in these periods of time where you don't have cash.
Yeah, I mean, so, and it's not that I don't have cash, it's that I don't have new cash, right? So just because I get a big payday doesn't mean I spend all the money in a month, right? It lasts me for however, and I've figured out how to go to, only spending money on the things that I need because I know it's feast or famine. Some of the other things that I do to generate income outside of the real estate closings and the quarterly distributions, we do some coaching, right? And so we help people figure out how to actually run their business and how to structure it and walk them through the path of, the past 3 years that we've been doing it full time and helping them like there's a whole lot of people who actually want to do the business, but they don't actually get the good, the bad, and the ugly. And so I think we actually provide a unique conversation about what this actually takes, right? So, like, I walked out, I had a year and some change worth of savings or for my expenses when I walked out the door. Not that doesn't work for everybody, right? And the fact of the matter is, trying to replace that much income over the course of a year for most people isn't going to happen, especially not acquiring real estate. It might happen in a business where you're selling widgets, but actually buying hard assets, it's probably not likely. And so being able to help people come with those strategies, I think is extremely important. Teaching people how to do underwriting. So we'll look at other people's deals and help them consider the different things that they may not have considered because they just don't have the experience. And so, I I I brand myself as a underwriter, right? And so as a underwriter as well as an asset manager, I have to eat my own cooking. And so if my model is bad and then we get into the operation and they're not lining up, I've got to deliver that message to the investors, but I've also got to figure out how to right the ship so that we end up in the place that we're supposed to be. Well, there's a whole lot of people who make models that haven't operated. And so being able to say, hey, yeah, it's great that you think that you're going to turn units as people move out, but and you've got your vacancy at 90%, it's just not going to happen that way. It, it's not going to happen on a value add property. So here's what you need to do to make your numbers a little more conservative so that you can actually hit the projections that you're offering to your investors. And, at the end of the day, some people may call us overly conservative, but I've seen it go bad. I bought a property where we thought we were going to change 4 to 6 units in the first year, and we changed 12, right? Like that will make you sick on your stomach if you didn't put the proper reserves away, if you didn't grow your revenue more aggressively than you expected to. And, I just know what it looks like if you don't properly position yourself for success. And if you don't have deep pockets on the backside of it, well, you end up in a place where you're either giving the property back or you're telling investors that you're going to need more money to come in. And this latter isn't terrible if you have the right people on your team. But if you don't, then, they're going to hang you at the stake and they're going to want to burn you because you told them that you're going to make the money. Now you're asking them to put more money into the pot. And, people don't enjoy those. So I'd rather raise too much money up front and then get to a place where we know we're stabilized again and give the money back than have to go back and ask for more.
Tell me more about your coaching, man. I'd love to hear about, is it just business that you teach or is there some mindset stuff? What's the full
Yeah.
spectrum of what you do?
Yeah. So you asked about my search before we got started. And so Dreamcatchers is the organization that is behind I Tuck the Red Pill. And so the website's dreamshouldbereal.com. And we go through 6 pieces of life. So we start with self-image, and then we go to relationships. And so, we work on ourselves, then we work on the people who are around us. And it's not just romantic, it's people at work, wherever you can think about. And then from there, we go to career. And with your career, like, we want to help people improve, accelerate their income. We want to help them be more effective in the workplace. Maybe they need to get a promotion. Maybe need to leave and go to another company. And we feel like if you got those 3 pieces of your life and pretty solid, you got a great core. And then we can go to health, right? Because if you're having immense stress in your relationships or at work, you're not going to do things that are good for your body just because you're trying to numb the pain. And so we work through health. And then from health, we go to prosperity, right? And prosperity is foundational, or health is foundational to prosperity, because if you don't have health, you're going to spend all your money on your prosperity. You're going to spend all the money from your prosperity. And then the final thing is significance, right? And so you got money, you've got fulfillment in your life. Now you want to go and be significant to others. You want to go help other people. And so how do you do that wisely? There's a whole lot of people who are generous and they just kind of lose all their money giving it to everybody in the world. But let's be strategic about who you invest in. Let's make sure that you're being an investor and not a charity. And in that, you're going to return on the investment, right? So whether it's your time or your money, you're putting it in places that are going to grow fruit. Because at the end of the day, I don't think any of us have so much that we just want to waste it. I think we all want to get some type of return, even if it's not a financial benefit back to you.
Is there a specific demographic, a type of people in a certain area or anything like that that you're targeting to help with your coaching program? Or is it just pretty much anyone in the United States?
There isn't a target market from a geographic standpoint, because we can jump on, we can do the Zoom. And if there's something where we got to be face to face, we can figure that out. But the person that I'm looking for, is the one who has been seeking more, right? I took the red pills to play off the matrix, right? And so if you get that, there's something wrong with the path that you've been on, and you just can't put your finger on it, but you're seeking a different path. I want to be your Morpheus. You're Neo, I'm Morpheus, and I want to walk you through it. I want to help you reprogram. I want to help you get all the skills that you need in order to be successful at whatever you want to do. And so, we do a gap assessment when people come in. It's like, all right, you come with the dream, and it's always your dream. We don't ever tell people what they should be aspiring to. You come in with your dream, we figure out what's missing, and then we help you come up with your strategy to go through it. And then, as we talked about the marathon earlier, we support you along the way. There are no travel agents where we are. It's all about tour guides. And so we're on the journey with you, and we feel the highs and the lows, and we encourage you when you're low. And we want to be the first person you call when it's high, because right or wrong, I selfishly get something out of other people succeeding, right? Like, I get the same dopamine hit whether you close the deal. Like you told me about those 2 deals you're closing at the beginning. Like, I want to know when you close them, because I'm going to celebrate with you, and I have absolutely nothing to do with it. But the fact of the matter is, Ruben closed 90 doors, and he closed another 90 plus door unit property. And that means that, hey, maybe one day Jerome can do the same thing.
Absolutely.
How about that? Like, I mean, the social proof is there.
Yeah, man. I think for me that the success it's all reliant on my ability to hang out, ride the coattails of some successful syndication people. Some people that are actively doing it and that may need of my services in terms of marketing, brand awareness, and capital raising. But those guys are the true geniuses. They're the ones that do the stuff that you do: the underwriting, the finding the deal, the acquiring the deal. And I'm just along for the ride. I can help them with some things that they may not be good at, that I'm good at, but they don't need me, man. They can, flow without.
That's not true, though. They do need you, and that's why you're in the deal, right? And the fact of the matter is, the vast majority of operators don't know how to cultivate a database of investors. They don't know how to present the data to investors so that they want to put their money in and feel comfortable with it. They know your investors know, like, and trust you now, and that's why they place their capital with you. Now you're vetting operators and say, this person knows what they're doing. This person knows what they're doing. I feel comfortable extending my credibility to them. But without you, no deal closes. So don't sell yourself short on that. No deal closes without you.
True that, man. So I'm super excited to be a part of them. But so we're like going through this so fast. However, there's some things that I want to touch on. I'd like to give you the opportunity to break down the differences between joint venture and syndication from your perspective real quick, and then we'll go into some of the resources that you have, and then we'll close out maybe one or two more questions.
Oh, perfect. So, I mean, we talked about it a little bit earlier, but for me, syndications and JVs, if you're ready to scale and you just want to scale as quickly as you can, the answer is syndication. You don't have to cultivate deep, long-lasting relationships with folks. You don't have to give them voting rights. And for me, that's the biggest difference, right? If I put money in the deal, do I have a say in the decisions that are made or not? That is the difference between syndication and JV. If you want a say in what happens in the deal, do a JV. If you want to be completely hands off and just get a return on your money, do the syndication from an investor or a partner standpoint. From an operator standpoint, what is your mission? Is your mission to hold all the cards and be able to do it all by yourself, or do you want collaboration? If you want collaboration with everybody that's in the deal, doing the JV makes a ton of sense. If you just want to be able to go and be efficient and do things as quickly as possible, then do the syndication. For me, I got lonely pretty quickly when I walked out of corporate America. I'd built a $20 million division. We had like 170 employees. I got used to seeing people every day. When I came back out, I was like, oh man, people actually got to go to work today.
Yeah,
And now it's just me and my computer and the deals and
yeah,
maybe
man.
going to tour a property. And I was like, well, how do I get people's attention? And how I get people's attention is their money going in the deal. And then this issue comes up. Hey, the lady in R just did a code compliance complaint with the city of Greensboro because she doesn't have any water. Well, why does she have any water? She didn't pay her water bill. Okay, so now the unit's condemned because it doesn't have running water. What are we going to do about this? Do we evict her? Well, she lost her job and she's pregnant, so we just going to let her stay? Like, having those types of conversations for me with other people is fun. Sure, I can make the decision by myself, and sure, I have a perspective, but getting other people interested and to actually participate in the conversation is exciting for me. And it's not, for us, it's not just about making money. Like, we actually want to do good in the community while we do well for ourselves financially. And so having people to hold me accountable to that, stay true to that mission, that kind of North Star for us, is core. Um, and so, that's my difference on the syndication. I'm doing it because I want more input, and I know a lot of people want less.
Yeah, dude. I love your business philosophy. I love your the way that you approach life and all of that. There's some things that you wanted to offer to the audience members, some resources where they can look into multifamily and some other things. Tell us a little bit about that.
Yeah, so I'm willing to do, for your listeners, I'm willing to do a 15-minute strategy call for those folks who are stuck or stagnant or trying to make a way, but haven't really figured out how. I learned through the School of Hard Knocks. I didn't go through anybody's coaching program. And I listened to, I still listen today to like 40 hours of podcast content or YouTube videos or whatever related to multifamily. And so I, I think 15 minutes can go a long way for a lot of people. And so it's my desire to offer that to the folks there. We can get that scheduled. The first thing I would ask you to do is connect on LinkedIn. So I'm Jerome Myers on LinkedIn. Myers is the proper spelling of my last name. Only one in Greensboro, North Carolina. The other thing I would like to do is encourage people, since you're a podcast listener, check out the Dreamcatchers podcast. We tell the stories of ordinary people doing extraordinary things. And if you're looking for that social proof, you've been working on your dreams, but they haven't manifested, or you've been trying to do these wild things and all the people around you are telling you that you can't do it, we're here to support you through it. We're here to give you stories so that you know, hey, I can do this. This person did this, and it might not be exactly the same thing as what I'm trying to do, but at least I know that if they were crazy enough to go do that, I could probably do what I'm trying to do.
Is there one or two favorite episodes that you have or different people that you've interviewed?
I think the person that I probably like the most is my friend Greg Washington. He had a couple of his friends from West Point die in action. And now he's went off and he started this project called Iron Sharpens Iron, where he's trying to help veterans go fix their PTSD and complex grief issues. You go into the military and they teach you how to be a hero while you're off in war. It makes a lot of sense. But on the backside, assimilating back into life, and my dad's a soldier, right? Assimilating back into civilian life, it's not the most simple thing to do. And those people who struggle with it, sometimes you see them end up on the street, others you see commit suicide. And so how do we take our heroes and put them in position to actually, win big for us?
It's been a great privilege, dude, to get to know you, to hear all of your insights from the business perspective, from the podcast perspective, from your philosophy of life, with what you're teaching your children, and the things that you're mentoring and coaching other students of yours, man. It's been so amazing. So I highly commend you for everything that you're doing. I think you're on the right path, man, and it's exciting. I'm definitely interested in watching you grow and following you. And it went by so fast. I didn't expect it. It's been a pleasure and honor to get to know you, man. But with that, is there any last closing words that you want to say to the audience?
The only thing I can say to your audience, Ruben, is your dreams should be real. And if you never heard it before, you're now responsible for that fact because I dropped it on you. And you can thank me later, but go off and be amazing and be great and make a positive impact on the world. And, you'll thank me for it later. My thesis on life is dreams should be real.